Before we get started, quick disclaimer. I put rich on the thumbnail simply because as a content creator, I need to balance. If I put something that is safe, no one's going to look at the message, including you. So I have to put that to balance telling you that this message is important, that there is something that I can really show you that can bring you results. And before we get started, I pre-qualify myself also. This is what I'm seeing on my trading platform. At the bottom, I'm pointing. There's something that I have that is close to a bagger, making more than 20,000 already. I don't review names simply because it's not meant to bring fear of missing out. It's just to bring about awareness, because not many people are mentioning about what is the big opportunity. In case you have been following this channel, you kind of know what I'm hinting at already. Or if you don't already know, stay tuned because I have good stuff for you. Hi guys, welcome back. Let's start today's story with this company that I showed you just now in a while. It's actually risen close to a bagger already for me. And it actually is a company that owns oil fields in East Malaysia. So not difficult to guess, right? So the idea of investing in this company is because you have assets of oil fields, and just in case oil prices stay high, this company will probably still be rewarding its shareholders with profits and dividends in the coming quarters ahead. Not only is it seeing good profits, its competitors or its similar industry players also seeing good results. That is good because when you want to invest, you're looking to see that the tide as a whole is going up. It's much easier that way. Just like previously in technology, we'll see that a lot of all those companies which were not making profits, once markets were favoring that they have high growth potential, they see their share price skyrocket. And many investors are thinking, hey, will they get back to previous level highs? Might as well look at companies now that are favored in the market already. That's how I see things, and that's how I usually suggest. The bigger concern right now is, has the oil prices peaked or not? That might be something that you're thinking of. So let me give you some counter arguments to this particular concern. If you see this chart over here, realize that share prices are still not at all-time high yet. That was reached in 2009 at about $180 per barrel. Of course, the question is, it's run up quite a lot already, correct? How much more can it go? Usual concerns. But I also like to point to a particular period, 1990. That was actually Gulf War. And what we can see is share price spiked for a few months. But again, I've suggested on this channel that Gulf War is much smaller than this one that's happening in Ukraine and Russia. So that spike was 3-4 months. This spike, if you see past COVID, is only at 3-4 months. That's why my intuition is there could still be some legs to run up, especially for oil prices. I suggested oil price could hit $150, but I think now that could even be conservative. So I'd like to challenge the idea. Oil prices at $200? Nobody has really mentioned that too much yet, right? But again, the world has always rewarded investors who think out of the box and think of the extremes and be right. So that's actually a key secret. But I have a further chart to show you and dispel that concern whether oil prices are too high or not. Let's look at oil price that is inflation adjusted on a chart. What do we realize? That again shows that oil prices, if you adjust it for inflation, is definitely not expensive. Right now, oil prices at this point of filming is about $110 per barrel, but we adjust for inflation, probably it's around the $90 range, which means again, it could double. That's why going to $200 is really not crazy yet. There are a few points that are fueling that perspective. The first is that OPEC has no incentive to bring down oil prices, and OPEC definitely can up their supply to help fill up the gaps by Russia. But why do that? Simply because they still make the same amount of money, especially if the prices go up. The margins just increase. Rather than increase volume for a low margin, might as well take the high margin with the same output, correct? So it doesn't make sense for OPEC to step in to try to help resolve the world's energy problem. And again, Russia is providing the world's second or third in terms of the biggest amount of oil. So if you check that out, you do realize that if the world isolates Russia, we have no supply coming in. For the short term, there is excess barrels everywhere. But once that is drawn down, people will start bidding for it. That's why markets are pricing good profits for these small oil and gas players. That's why when we move early, when we think what is going to happen in future, we can make ourselves rich. The second part is, can the world economies function without Russian oil? This is again in line with the previous topic that OPEC will not be providing. And oil is supplied from Russia mainly to Europe. Germany, if you check around, they have 2 gas pipes. They turn off one, apparently. There's still one more that's running. It shows that when Europe is fighting this sanction war, they also have their hands tied, because if they have high inflation, they're going to have political unrest also in many ways. So a lot of things favor that oil prices can still get squeezed to even more extremes before alternatives can come to the market and before people start to find new solutions to things. In this period, I'm researching a lot on war. I think that is going to impact the concern and fear that commodities will be insufficient. That's why I'm looking to track a lot on this war's progress. If you're keen, check out the members channel. I'll be releasing content on the war in that space. Simply because in YouTube's algorithm, they understand that war is sensitive and they don't want to feed it too big to an audience. So might as well I bring it to a private channel. I share with you updates on it as well as my perspective. So you kind of know when this cycle would eventually end. Because commodities is always a cycle. But right now, we're at least only in the mid of this cycle. And hopefully, and if it does indeed get squeezed up, you start to see that prices shoot beyond anybody's expectations. Now, I'll put the discussion back to a point on agricultural stocks. Agricultural stocks in Singapore, the main one is palm oil, because Indonesia and Malaysia are our neighbors, correct? So we produce a lot of palm oil there. We're not like Ukraine, which produces a lot of corn and wheat. In Southeast Asia, we produce palm oil. And palm oil, if you look in terms of history, there's 2 main drivers to things. The first is, of course, consumption for cooking. That is when palm oil is used by countries such as China, and actually India is stepping up to become a big consumer of palm oil. And as we can see from this Ukraine war, sunflower oil is in short supply. That's why they need alternatives. Palm oil is seeing that demand. The second key thing is that palm oil has a lot of correlation to oil prices, crude oil prices, simply because palm oil in certain circumstances can be created as a biofuel. So when crude oil prices run, you start to see palm oil prices start to catch up also. In Singapore, we have a few wonderful names. That's why in the subsequent weeks ahead, I'll be deep diving on Golden Agri, on Bumi Agri. These are companies that I've prepared certain material already, and if you're keen, subscribe, stay on for it, and get notified when the tutorial is released. They are actually increasing their dividends, and that's a big signal that they foresee good profits in the coming quarters ahead. I'll address each and every concern in those tutorials, so stay on for it. But the big rounding point for today's tutorial is this. If you want to be rich, you need to be comfortable being a contrarian, to be able to see things that people are not seeing. When we see advertisements, they usually shout US tech names, and we feel a bit more comfortable buying names that we are familiar with. But being comfortable with these names are just one thing. It does not mean that they are definitely the best investment idea at that period for you. So think a bit different. Looking for unknown names, like what I've shared on this channel, can be very profitable, simply because we are riding with the opportunity in the market right now. We can look at it objectively. Whichever industry is favored, whichever industry that has earnings expansion, and you can understand the industry dynamics, that is actually an avenue whereby you can actually profit big. And as a last point, I have actually some previous comments that I always wanted to justify. These were some concerns that were left on the Sam Marine video I've done previously. They mentioned that Sam Marine is sunset industry. They mentioned that Sam Marine might crash past 8 cents, when I actually did a video sharing that I actually subscribed their rights against all expectations. So if you haven't seen that video before, let me invite you there. It was a very contrarian idea. Sam Marine was looking nowhere. It looked bad. I didn't really like it. But when I thought about it, could that be the worst of the worst? I decided that there was a slight chance that is. And right now, Sam Marine is way above that 8 cents that I used my rights to exercise. Not that it's a good company, but it's the thought process and seeing opportunities when general market is not looking in that direction. So let me invite you to the tutorial and I'll sign off from here. Take care and goodbye.